Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Today we're going to be going a lot through platinum group metal companies. Not companies, but platinum group metal sector. And I'm going to show you something. Somebody made a comment about has the market dynamics shifted where gold's going to outperform platinum for a long period of time? What I do is I go through the data, guys. I don't just look at one thing. I look at the entire thing. I do this for all of the sectors that I cover on the website. I look at all the data, and I'm a fundamental technical guy. I use ratios because that is something that takes the wonkiness of the dollar value, which goes up and down, out over time. You can say that this is for surely cheap against other assets, and that's why I use it. I also use cycle analysis, which I call market conditions, and I go through all of this stuff to get a picture of why I may enter something. And we're going to go through an example here together where I go through a setup and why I am bullish on platinum and show you the data behind it. Now, is this data 100% accurate? Are there forecasts in some of this data? There is. And nothing will be 100% accurate because forecasting isn't 100% accurate. But I look at the statistics and the probabilities of me making money, taking a long time frame, and looking at all that stuff. So this isn't that difficult, and I understand people are going to say, "Well, it's not going to happen immediately. Maybe it will, maybe it won't." How do you know that? You don't. You don't know that. So let's look at the data. Let's take a look, and I'm going to give you my opinions of what the platinum group metal market looks like. I'm going to specifically focus on platinum specifically and a little bit of palladium. And we're going to talk about it. We're going to dive into it. This is what I do on the website. So I'm sharing a little bit of one of the sectors that I like, just so you guys can see. So let's go for it. If you want to follow me at Finance, if you want to join the community, finding-value.com, use discount as the coupon code if you want to save money. All right, let's get into platinum here. Let's talk platinum group metal. So we looked at the platinum group metal miners. They're cutting production. Yes, Sibanye-Stillwater is cutting production at its U.S. mine to turn them around and become profitable. What does that mean? It means that they're not profitable. So Sibanye-Stillwater plans to reduce output of platinum and palladium by about 200,000 ounces per year at its U.S. Stillwater mine. This is about a 45% cut in output. They plan to cut about 800 jobs in its U.S. mine. This includes nearly half of its U.S. mine workers. So they're cutting production. What about other ones? Yes, Impala Platinum. Here, let me move this down a little bit for you guys can see that. Yes, Impala Platinum Implants is cutting production and considering other measures to address the challenges it faces. They're doing restructuring. Implants plans to cut up to 14% of its platinum group metal mining production between 25 and 27. This includes cutting projects and repositioning mines. Implants is cutting spending across its business to reflect low metal prices. The company is focusing on cost-cutting measures in Zimbabwe and Canada where it can achieve greatest savings. So they're all trying to cut costs because the price of the platinum group metals are too low. Here's another one, Anglo American Platinum, cutting production. Yes, Anglo American Platinum Implants is cutting production in 2024 to reduce costs and adapt to market conditions. Their production guidance is 3.3 to 3.7 million PGM ounces, which is unchanged from previous guidance. Implants expects to mine 2.1 to 2.3 million ounces of MNC and purchase 1.2 to 1.4 million ounces. So they are also cutting production. Why are they cutting production? That's the question, right? It's the low prices. Now here's platinum priced in dollar long term. We are squeezing into the corner here, and we've got a bullish engulfing right at the tip here. I've been buying the living crap out of it from 2020 on these bottoms, anything below about $1,000 an ounce and below for the price with the premium for the platinum physical metal, that's the location. So I've been buying the bottom over here and right before this big move. And this is a squeeze. So whenever you get your highs coming down into a corner and your lows coming up into a corner, you're squeezing supply and demand into a corner, which is about to break upwards. Now, why do I say it's going to break upwards? Well, I've got a bunch more data that we can go over and talk about. But guess what we've got? We have all of the mining companies cutting production. What do you think that's going to do? It's going to squeeze this to the upside because the price is below the cost curve. It is below the cost curve. Let's keep going. Here's platinum demand. So looking forward in terms of platinum, at least this, which was done in 2022, it was using estimates by the U.S. Department of Energy. And what they did is they added up all of the demand over time. We have a weakening demand in 2020 where it got cut because of the crisis of COVID. And then projected forward, we have increasing demand for platinum across a bunch of different things in this world. The global mine supply peaked in 2008, I believe, and it's been declining ever since. That's the yellow line here. This is the global platinum primary mine supply. We also saw that the companies are cutting production because the price of platinum group metals are too low. The estimated platinum into market balance deficit, which is slightly positive here in 2022, goes into a never-ending deficit to demand starting in 2023. So the deficits grow and grow and grow, and they blow out in 2023. So this is what the platinum, and this is only platinum, supply demand fundamentals look like. Now, could this be a little bit different depending on the company and the data that you get? Yes, it could be a little bit different, and it could vary based off of the sources that you get this information. Now, you have to look at some of the demand here. Catalytic converters, that's the blue, and it does go down. They've got a peak around 2028, 2030, somewhere in that range. And that's if, that is a huge if, the forecast that whatever they used in their forecasting model is correct. We may see this extend outward if we hit material constraints to adopt battery electric vehicles, which I think we will, and other constraints in minerals that could stop the adoption of electric vehicles, perhaps copper, perhaps cobalt and some of the battery metals, perhaps aluminum, steel. There are a lot of elements on the periodic chart that could slow down the adoption of electric solutions based off of energy transmission and the delivery and production of electricity-based solutions. So silver is going to become a problem for solar. Copper is going to become a problem of battery electric vehicles in the motors and renewables because we're going to get tight. Transmission power lines will be a obstacle to overcome. So I view platinum as a huge upside of catalytic converters, maybe perhaps extending out in the future for hybrids because we don't have the minerals to provide battery electric vehicles. Toyota has come out and talked about the mineral constraints and why they themselves are not adopting battery electric vehicles, but instead are focusing on hybrid technology, which requires catalytic converters and higher loadings of catalytic converters. The problem with the higher loadings and catalytic converters is it puts platinum, palladium, and rhodium into a gigantic deficit or shortage out in the future. And that's what we're seeing with this crosshatch here of this deficit coming out in the future. Now, the problem is these deficits not only exist in platinum, but they exist in all sorts of minerals starting in the mid 2020s, which, guess what? We are in the mid 2020s. So it is all going to play out in front of our eyes, these big deficits. The question then becomes, which deficit will be the largest? And if these deficits transpire, how does it impact the financial markets, not just from an individual perspective? Because if you start to get deficits in the energy source itself, I think it could tank bond markets and currencies because the system design cannot withstand energy shortages. The system design of the currency itself. And people are going to run to platinum, palladium, and other physical metals for a store of value, perhaps, which is overlaid on top of this and is not seen from a longer term perspective. They're only looking at it from an industrial perspective. Here's platinum, palladium, and rhodium price going back. It bottomed in 2016. We had a big run from 2016 to 2021. Palladium and rhodium had massive moves during that time frame. Platinum did not participate in that move as much during that time frame. The companies that produce platinum group metals look at this entirety. So we've been in a huge bear market, and this is the reason that they are cutting back on platinum group metal production is because of the large decline in palladium times platinum times rhodium. It's the basket of metals that they earn their production on. It's not one or the other. It's not just platinum. So if platinum goes up and palladium and rhodium stay low, they may not increase production of platinum because the group of those metals are low. If there's a shortage in palladium and rhodium and the pricing goes way up, they may overproduce with a little bit too much platinum, irrespective of what they get for platinum. So they could drive a surplus in platinum because they can earn their money on palladium and rhodium. So you have to understand the dynamics of when they produce these metals and how they are impacting the market balances. So just because one may be in a surplus, they may continue to produce because the trio of these is still favorable to produce and they can make a lot of money. And recently, this big move is a palladium and rhodium move, with platinum being the left out metal. Here's the platinum cost curve of 2022. The platinum cost curve is high. So if we want to produce 8 million ounces of production, your cost needs to be above $1,100 or $1,200. That's their break even. And then they need to make some profit. But that, remember, is the groups of metals. So if the groups of metals go below that, which they are, then they won't produce. So you can squeeze one of the metals and they still might not produce because of the trio of metals. And then you can see the cost curve is up around 2,000, a little bit below 2,000 if you want to produce 12,500,000 ounces. But here's the thing. We've seen a decline in platinum production since 2008, 2009. And prices peaked in 2011, and there was not a supply response to that big production peak of platinum. Just an FYI, in 2011. And that's this peak here. In 2011, there was no supply response there when it jumped back up, which makes me think that the mines are basically starting to deplete. Coming down, we've got platinum and palladium substitution going on because of the ratio. And some people will say, oh, it's just a ratio. It doesn't mean anything. Yes, it means something. Palladium and platinum can be substituted for each other. So platinum is increasingly being used in place of palladium, particularly in the automotive industry. This is due to a number of factors, including market imbalances, security of supply concerns, reduced automotive production during the pandemic, and platinum attractive fundamentals. The World Platinum Investment Council estimates that 620,000 ounces of palladium were replaced by platinum in 2023, and that another 700,000 ounces may be replaced in 2024. However, the World Platinum Investment Council head of research, Edward Stirk, expects palladium to move into surplus from 2025 and to be substituted for platinum from that point. So we're going to see the market balances shift back and forth as substitution occurs in catalytic converters and other things in the world because platinum has been cheaper than palladium. So keep that in mind. This is the platinum and palladium ratio as we go over time, and it swings back and forth between the two metals as substitutions occur and as production expands and contracts based off of the trio of what's being produced and the trio price at that time. So we saw an overproduction of platinum during this time frame of 2009 all the way to the bottom of 2019, 2020, 2011, or 2021, 2022. And this is where I was buying my platinum, massively buying. And obviously, it's the price of platinum and the premium that you can get it for. And this is your cycle, your cosine or sine wave, depending on where you start it. And it cycles back and forth. And we are coming back up where platinum is starting to outperform palladium. And we're going to get a big move higher, probably into the late 2020s. So looking and coming on down, this is your palladium supply-demand balance. We had a massive move in palladium. And you can see how this supply balance is changing over time. We ran a lot of deficits in the late 2010s. So that's cut off for palladium. But you can see the big deficits here, and then it goes into a surplus based off of substitution for palladium. This is palladium. Then we look at the platinum market dynamics going back to 2014. It was a deficit back here. We ran into a surplus, a deficit. We ran a surplus in 2021, 2022, and then this surplus here over the years is what led to the price falling for platinum. When you look out into the future, we've got large deficits projected, and 23 and 24 are deficits in platinum. And these deficits are occurring because of the substitution. So when we go back to this ratio chart, what they do is when palladium is cheap and when I would buy palladium, they are doing the same thing that I'm doing. They are substituting platinum. They're substituting platinum with palladium when the price is up here. Conversely, they are substituting palladium with platinum when the ratio is down here. So that is what we're looking at when these things move back and forth. Any person like myself who's an engineer, and we're going to engineer materials into the products, we're going to engineer palladium here, and we're going to engineer platinum here. So industry is going to put more platinum when it's cheap and more palladium when palladium's cheap. And that's where we're getting these cycles. And these are the market dynamics and the balances that are projected based off of substitution. And that's where we get these big imbalances. So we come and we can also look at gold versus the platinum ratio. I use the platinum to gold ratio, but this is gold to platinum. And what I'm looking for is relative valuation compared to history. This is going back to the 1800s. Whenever the ratio was about 1.2, when gold was slightly more expensive than platinum, it was a great time to buy it. And it was a fantastic time to buy it at about 1.2. We peak, pull back, peak, pull back, peak, pull back. And that's that sine cosine wave that you can see goes back and forth. recently we have gone into an anomaly where platinum has gotten so cheap in relationship to gold that it's blown itself off the chart, where gold was in fact priced at over 2 times the price of platinum in 2020. I swapped my metals. I swapped some gold for platinum in April of 2020, where I received over 2 ounces of platinum for every ounce of gold. And that's where I did it. And I think that this ratio will come back down due to market balances. Now, is this ratio, could it go higher? It could. It could go higher. There are a lot of central banks that are buying gold and they're not buying platinum for monetary uh, reasons. But given the market balances out here for platinum and the substitution that's going on between palladium and platinum, I can put a bet on that is off the page cheap and an anomaly compared to history. So it's not about looking at this and saying, oh, well, it's cheap and it's cheap for a reason. No, it's not cheap for a reason. It's dirt cheap. And every engineer in the world is going to use platinum over palladium if this market imbalance exists. And there's a surplus it was a surplus, it's now a deficit in platinum. The market will balance itself out. And every spot that they can use platinum instead of gold, they're going to use it. So everything, when these ratios get out of whack, everyone in the market is going to try to engineer in solutions of the cheaper material. Coming on. This is in response, it says, and this is some other people, it says, honest inquiry, is it not possible that the fundamentals for each metal have shifted? Central banks buying fewer diesel autos being produced. Platinum is under the cost of production, so should increase. But how much and for how long? It's not clear that the gold to platinum ratio will return to its mean. Well, I just gave you a whole bunch of information, and you guys can determine for yourself what you think platinum will do. Now, here's another thing. In the hyperinflation in Germany, in the 1920s, platinum was priced 5.5 times the price of gold. So if we get a very large inflation or hyperinflation in the system of the entire world, is it possible that platinum gets priced 5.5 times the price of gold? Yes, it's possible. Am I stating that that will happen? I don't know if it will happen. But the better question is not if that will happen and what the probability of that happening is. The better question is, would you put the bet on if platinum is at all-time 125-year highs in this ratio, and platinum is cheap against palladium in the early 2020s, and platinum is cheap against silver, and it's coming into a falling wedge, where platinum is cheap against all of the other metals, and you've got projected deficits out in the future, wouldn't you put that bet on? Why wouldn't you put that bet on? Now, I'm literally giving information out here for free for everyone on the setup of platinum, which is a ridiculous thing. And I can also put this bet on below the cost curve of $1,100. This is about as for sure of a bet as you can get, as to as sure as a bet. Now, is it a sure bet? No, nothing's a sure bet. But it's as close as you can get given where the historical valuation of platinum is against all the other metals. Now, people are going to say, well, maybe something's changed. They try to explain the reasons why. We had a market surplus and things were all against platinum. Everything was against platinum in 2020, 2021, and that bottom. What do I mean by that? There are further research that Yale has done about the platinum to gold ratio and what it means. I'm going to give you another example. The platinum to gold ratio, as this falls down, those are your commodity bull markets. There's also something else that I don't want to share that also drives these markets. I'll just say there's something that drives it that people aren't looking at. And that market has already shifted. Another thing, there's a correlation of gold to platinum in the Yale research that indicates that when gold outperforms platinum, that the stock markets go up. And when that reverses, when platinum outperforms gold in these time frames, the stock market doesn't do as well. So it didn't do as well from 1940 to 1970, and then we had a big surge higher because gold. This 70 to 80 is a unique period because gold was being held down. And when it was finally freed, we did get this surge higher here in 70 to 1980 because gold was being manipulated lower. And when they finally let it freely trade, it did a huge snapback. But generally speaking in history, when platinum outperforms gold, the stock market generally underperforms. And that ratio of those two that Yale performed is more accurate and more predictive than the CAPE ratio and any other ratio that they could follow. So the R squared value, the relationship of this ratio going up or going down, is a stronger indicator of market performance than any other metric that they could find. And here you can look at 2009 when the market bottomed in technology and S&P and look at the ratio go all the way up with the S&P 500 and the NASDAQ. Now, when this turns and it goes down and we see an outperformance of platinum, then we could see the markets struggle. If they could go down, they could go sideways, they could do something that underperforms, which a lot of people, they don't know this information that I'm sharing here. I'm being generous in sharing some of this information. Now, I do all of this on the website for every single group of what I'm investing in. And I'm tying technical analysis to it. Here's another thing to look at. The platinum to silver ratio. I want to go over that real quick. I didn't share that. But here's platinum divided by silver and the ratio. What do we have here? It's a falling wedge. A lot of people talk about the potential move of silver, or they talk about silver being the most undervalued commodity in the world. I would argue that platinum is the most undervalued commodity in the world. We've got a falling wedge coming to the corner. We just broke out to the upside of platinum, ready to outperform silver. And usually this occurs right roughly at this, and sometimes you get a little bit of a lower move and then a move higher. And this could occur. The setup here is ridiculous because platinum, if this does go back up to this level up here, that would say, well, some people would say, well, silver is going to underperform. No. Silver has the largest cup and handle of anything in the markets here. Here's your cup and handle. And there's other things in the market that I share with people on the website that drives this. This is not by, these moves are not by happenstance. This move from here, this consolidation from here to here, there's a reason it consolidated during this time frame. And no, I'm not going to share everything. But we got the cup and handle, and this is going to break. It's already broken its handle, and it's going to run probably all the way to multi-$100 is my guess. It doesn't mean that 255 or 350 is going to be the peak, because I didn't put that. I moved that here. I can obviously move it to the top too, and the projection would be like 370, 350, somewhere in that range up here. But this is going to go up. And if we see platinum outperform silver as this goes up, that means that the squeeze that we are getting in platinum could be the biggest squeeze and release of energy ever. One of. And this is the squeeze before, and it's the same fractal. You get the 1, the 2, the 3, the move lower, the consolidation, the 1, the 2, the 3, and then you get the same consolidation. So this portion here is this portion here. It's just squeezed up a little bit. If you guys can see the fractals, it's the same setup. And then we're going to get a large release of energy higher when this does break. Now I've been buying these bottoms from here and here and here. I've been buying the whole time. Anything under $1,000 with the premium included, I've been buying the crap out of it underneath that. So in the 900s and 800s, I've been buying it big time. Now, some people say, "Oh, that's a lost opportunity." Okay, guys, if that's what you want to think, um, we'll see what occurs going forward. That's what I'll say there. Here's Sergey. My firm position is that the coefficients with no real trading are empty ratios in terms of technical analysis, meaning lines, support resistance levels, indicators are like ghosts, or like the same lines and levels on a chart with random data. It's a fact that there are nice trends and patterns on such, and in actual experiment, a number of professional chartists couldn't discern real stock charts from random data. In my view, TA on these coefficients with no real trading, with no crowd participating, is one of the strongest popularized fallacies, leading users to conclusions with no basis at all. I would disagree. Now, I don't that technical analysis works in the very short term. I don't think there's necessary predictive factors in it necessarily. One thing that we can do is we can look at the fractals, which is humans are trading with other humans, and they create these psychological extensions of the herd. The psychological extension of the herd is this chart consolidating. The psychological extension of the herd is this chart consolidating. The chart will not tell you when it will necessarily break, but it can get you in a rough location of when we should be entering these potential investments. The consolidation, the move lower, the squeeze up, before the big move. Now, does this necessarily mean that we have to go higher immediately? It doesn't. It does not. But guess what it does? It puts the favorability in my camp that the herd is lining this thing up for a potential move higher. Then I add on top of it the fundamentals of the supply, demand imbalances of all these different metals, the substitution, the ratio behind it, the substitutions, the cost curve of buying below the cost curve. So I'm buying it below $1,000 with the premium. The fundamentals of the companies themselves, the supply demand market balances looking forward, the breakout against the potential squeeze of platinum moving higher, the cutting of production because they are below the cost curves, which is further evidence that I'm buying below the cost curves. And I add it all together for an investment picture. That is how I'm doing it. Just gave it away. Now, guess what's going to happen? If this doesn't move in 6 people will lose interest. They'll forget I ever posted this, and they will take no position. And maybe they took a position, and then they'll sell it. And then when the big move comes, it could be rapid. It might not be rapid. It could be slow. It could be rapid. We could see platinum go up to $2,000 in a heartbeat. We could see it go to 4,000. We could see it go to 20,000. We could see it go to 60,000. Now, am I just making these numbers up? Yeah. But historically, if gold goes to $20,000 an ounce in some gigantic bull market in a very inflationary environment, which is not a projection, it's just a possibility. And if we hit a historical ratio that was normal, a 3-to-1 ratio, let's say, which is on the expensive side for platinum, well, 20,000 times 3 is $60,000 for platinum. Now, am I projecting that? No, I'm not. Could it be a possibility? It could be a possibility on the upper end of where it could go. How could it go to 4,000, 5,000, 6,000, 10,000? Yeah, it could go to any of those numbers. We don't know what it looks like. We don't know what the market conditions will exactly be that is subjecting the herd to buy these metals. We don't know what that looks like yet. We could go way up. What if that deficit that we went over doesn't get solved? It gets worse and worse and worse and worse, and the price goes up to price out these materials. But what if the demand, basically, what if the price to break the demand is way higher than what we think? What if we get into a situation where we are short on palladium, platinum, and rhodium, and we run the price way up? Rhodium went to $29,000 an ounce before it kind of turned on over. Palladium went up to low 3,000s. You don't think platinum could easily do that? Somewhere between those two numbers? Easily that could occur. And rhodium went from $600 an ounce in 2016. I think it was 2016 or 2018. Maybe it was 2018. 2016 or 2018. Ran all the way to 29,000 an ounce. Palladium went from hundreds, low 100s, $200, all the way to $3,200. Platinum, it's going to bottom here. I think it got down to $700, $800, $700 and something dollars in COVID low, but mainly $800. I would count as a low with a false breakdown. That's going to go to some ridiculous level. Historically, palladium and platinum ratio. So platinum at the upper highs is about 6 times, 5 to 6 times the price of palladium. If palladium doesn't go down much further, which is around $1,000 an ounce, well, that's $5,000 or $6,000 an ounce that platinum could go if we go to the upper end of that ratio. What if palladium goes up to 2, 3, 4, 5 grand? What if palladium's 5 grand or 4 grand, and we go 5 times that? Well, that's platinum at 20,000. So the hardest thing to do for any investor that I have seen, hardest thing, is that people can't load up when others are negative on it. They can't take a big, substantial position size when things are low and then ride the entire bull market. This guy is a rare guy because I can do that. Very rare. I've beat my psychology to become what the game requires, the game of investing. So I am a student and I am a function and I'm a byproduct of the game of investing. And I focus my efforts in becoming this person who is going to be successful at these types of things. And what's required is all that background information that I just went through on Twitter here, what I posted. It's taking large amounts of data, compiling it together, and coming up with a potential investment product, solution, idea, thesis, whatever you want to call it. Doesn't matter. And that's what I did in engineering. I take large problems that are very hard to solve, and then I gather all the information, and I come and figure out a solution to solve it with the least amount of money and impact to production, let's say, if you're doing it for manufacturing or whatever it is. That's what I did here. Now, there's other areas that I think make the platinum case even stronger, and it deals with energy. Platinum it has a very high melting point. It's one of the most exotic materials known to man. And that high melting point and its difficulty to get, I think energy is going to go way up in price. I think we're going to squeeze energy. And I think platinum, the cost curves and all that stuff are just going to go up, 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 and up. So there's other things that are going to impact all these metals in the future. Now, I could be wrong. Maybe energy gets cheaper. That is a possibility, but I would not necessarily bet on that in the short term. I think we've got a lot of demand coming. So a lot of things impact this. I've looked at it from many, many different angles. I'm looking at everything from an energy perspective, and I think energy is going to be a good bet too. So, but if you guys are interested in the companies that I'm playing all this with, if you're interested in how I'm looking at other markets and stuff like that, it's very similar to this. So, That's what I've got for today, guys. We're going to end it there. Give me a thumb up. Subscribe to the channel. Subscribe to the website if you'd like. Discount coupon code if you want a small discount on the monthly and a larger discount on the yearly membership. And we'll end it there, guys. So we'll catch you later. This is Finding Value.